Welcome to the Credit Union Business News Podcast, the only all-digital, all-business resource for credit unions. This episode is sponsored by Bator Training and Consulting. We create environments where employees actually want to come to work and members want to keep coming back. I am Kbator, your host for the Credit Union Business News Podcast, and this is a special episode. This is the 10th episode of the first season, and that may not seem like much of an accomplishment, frankly, but being one of the writers for Podcast Magazine, you would be surprised how many podcasts don't make it to episode 10. And not only are we on episode 10, but we got a whole another 15, 16 ahead of us that we already have planned. But I wanted to have some fun with this episode and invite three of the great guests that we had in the first 10 episodes, and also make this special because I want to look forward. You know, obviously here in May 2020, we're dealing with some unprecedented challenges and a lot of ifs, more questions than answers. So I want to get some thoughts from these three experts, and I will quickly introduce all of them. You all know them from past episodes, but we have Robert York, who is the Vice President of Marketing and Business Development from ILWCU in Long Beach, California. I got that right, Robert?
You did.
All right, everyone, so it's Monday morning, so everything I get right is just a plus. We have Stacy Armijo, who is the Chief Experience Officer from Amplify Credit Union in Austin, Texas. Welcome, Stacy.
Thank you.
And, of course, Eric Bruen, who is the Chief Executive Officer of Desert Valleys Federal Credit Union in beautiful Ridgecrest, California. How you doing, Eric?
Good. Thanks for having me, Ken.
Hey, great having all three of you. All three of you were awesome guests. You know, frankly, and I would say this on the show, even with recording, if we didn't have an awesome guest, we would talk about him or her behind their back. But I can't do that. Robert and Eric certainly know I would do that. Stacy probably thinks that I'm nicer than I actually am. But now she's already picked up on me and, about knowing me for an hour or two. But the first question I have, I said we were going to have a little bit of fun and celebrate the 10th episode. And I know that we're all a little bit competitive. Anybody want to take a guess as to who has the most downloaded episodes so far of the Credit Union Business News Podcast? Or I should say, which guest episode is the number one rated right now?
Ooh.
I thought it was Roberts.
Eric's.
I thought it was Roberts. I thought I questioned that on Facebook, but I thought it was Roberts.
You did question it on Facebook.
I haven't even checked.
Oh, so yeah, you're basically admitting that you haven't watched all the episodes.
No, I watched them. I just don't look who had the most downloads.
Yeah.
I just look at it for content, and all of them have been good.
I invite the dude to the first episode. Never mind. Stacy, you got any guesses?
My guess was Eric. I bet it's Eric's episode.
Okay. All right.
Yeah, I thought it would be Eric's too.
Okay. All right. Well, let me go through very, very briefly because they all were good. And I'm going to just, for our audience out there, just give them a tally of the least downloaded for now, because we purpose these all the time and send them out via social media, to the number one downloaded. Surprisingly, and this is funny, surprisingly, the least downloaded episode right now is the one with Dr. David Schramm on family values in business. Is it because we don't really care about family values in the credit union industry? Is that what's going on? I don't know.
That's kind of heartbreaking, honestly.
Yeah, no kidding.
Yeah. When was the timing of the episode? What was the timing of the episode, Ken?
Check out the big brain on Robert. The timing of the episode was, if I remember it right, it went live just before the pandemic. So, we had, and it was funny because I had him on another show and he was awesome. And I said, you know what, we got to have you on the Credit Union Business News Podcast. It's a perfect topic for this group. And we were so excited about it. I'm like, wow, nobody's listening to this sucker. But again, that was right around the time that we had this pandemic thing go on. The next least downloaded one is Vicky Lowe on the Mommy penalty box, but she is the most recent one, so we'll give her a pass. The third least is Becky Landis and Come On Home. That was an interesting one because that was on a brand campaign for their anniversary. You know, maybe not. You know, maybe that just didn't hit home the way that I wanted. But it was a great episode. I suggest you go back and listen to it or watch it. The next one was Anita Bellitz, who talked about getting promoted and women in the workplace and so forth. And then it was Monica Lashinsky. We talked about virtual training. She got about 50 downloads, which seemed about right. And then the next one, we go to the top 5 downloads of the Credit Union Business News podcast. Coming up in the top 5 first was Stacy Armijo. Woo! So you made it to the top 5. Closely, just above her is an Eric Bruen. Now that one I
knew I wasn't that high.
You're 4th highest of all of them.
Yeah.
You had 81 downloads. And now for the top.
Well, I knew I did 80 of them, so.
Well, yeah, I know you've got a lot of brothers. You got a lot of cousins. You know, it's a small town. It's a small town that you're in, and it's close knit, and you're well liked. So you know, we'll probably have 180 next week.
Yeah.
The top 3, surprisingly, the third one is my intro episode with Tim O'Hara, the founder and editor of the Credit Union Business Magazine. Number 2 was Chris Bauer's episode from Endurance Federal Credit Union. And yes, Eric, you're right. Robert York is the number 1 episode on Credit Union Business Podcast with 120 downloads. He did, I will say though, he did get a head start on everybody being in the very first episode, but we'll still give him credit for that. So good job, Robert. Let's give him a hand.
Wow.
There
Thank you.
All right. So I said we would have a little bit of fun. What are you seeing and what are kind of the trends that you're expecting in your area going forward 6 to 9 months? Let's use that kind of time frame.
Well, it's just a couple quick observations. Why it's interesting looking at the panel. I'm the only one in my office. Just pointing that out. Interestingly enough, I'm the only one that's actually on site. My entire staff has been on site since the 29th of April, and we're back to our full normal operating hours by next Monday.
How do you know that Robert isn't in his office? Maybe he's just going to the pool afterwards with that.
I don't mean that negative. What's interesting is it's rural versus urban in a lot of ways, and I really think that there's been probably some differences in how we've reacted to this thing. My town has been, I don't want to say unaffected. I want to say largely its effects have been very targeted effects versus more of a global effect. And we have our primary employer, the employees, 81% of the town never laid a single person off. Yeah. So 81% of the town continue to be paid throughout this entire process. So we've always had an interesting reverse bell curve in terms of our economics. And what we're seeing is exactly that, is that the spectrum of how damaging it is. But we actually have seen a steady increase in deposits. We have seen a steady increase in member savings simply because they are not using funds in the same way. We haven't seen as dramatic a decline in interchange because people are still shopping. They're just shopping online or through other channels. They're just not shopping the basic services like gas or restaurants in the same volume. So, I mean, 15%, something like that. What we did see was a massive drop in fees, but that was at our choice. We chose to say during this crisis, we're going to waive fees for 45 days. We lost 45 days of fees. Interestingly enough, the moment we turned it back on, the change between having it on and off was almost negligible, and the impact of the membership in terms of what we expected to get, oh, now you're charging us was almost also negligible. Maybe, 2 or 3 people out of 3,000, that had a little, and we worked with them and it was done. But what's interesting is we definitely are seeing, I think that the short run effects for credit unions are not as dramatic. We really have to be more concerned about what the long run effects are of this thing.
Yeah.
Because I think we've got a ticking time bomb in rental and mortgage incomes. I think we've got a ticking time bomb in bankruptcy filings. Probably, we talked about how about 10 or 11 we really saw the advantageous bankruptcy filings.
Yeah.
And we'll see that again in this case in 2022, late 21.
We're seeing definitely increased deposits. I mean, that kind of typical flight to safety in a downturn. We're seeing that in the business. I would agree that we are less concerned about what's happening right now and more concerned about, in our case, loan charge-offs. So fortunately for us, we've been on a long path of diluting the fee-based income on our balance sheet. So most of our income, 88% of our income in a given year is driven by lending activities. So we are seeing a pretty substantial drop-off in interchange income and in fee income. And similarly, some of that was our choice to waive some of our fees, but most of it really is just driven by lower transaction volumes. Yeah, so the transaction volumes haven't gone away, but they certainly are less. I think down about 30%-ish, something like that. And so, the interchange income that you're going to earn off of that is going to be different. But luckily, that's a smaller portion of the income that we count on anyway. But what we know is how many forbearance plans we've put people on for their auto loans or their mortgages. We're pretty strong in commercial lending. So we lend very close to the commercial lending cap. And we know that this is going to hit that area particularly hard. So we're seeing right now our delinquency rates, we're watching really closely. We are being really proactive with our borrowers, reaching out to them at certain try to encourage them to get on a forbearance plan, do a skip-a-pay. We've waived all the fees for skip-a-pays. We've made the forbearance plan process easier. Those are the kinds of things that we're working on. Our goals really are, let's preserve the principal and try to push out these obligations a few months in hopes that our members' income can stabilize, they can have more confidence, and we can prevent as many of these loans as possible from going into delinquency. But kind of like you mentioned about looking long term, what we're really thinking about is what's going to happen second half of this year, what's going to happen in 21. Yeah, because especially for us with commercial loans being such a large part of that, we know that process takes a long time. So we aren't really going to see that play out. We'll see challenges in the auto portfolio sooner. We'll see challenges in the mortgage portfolio sort of midterm. And then we'll see the challenges really come to fruition in the commercial portfolio, really not until 21, starting Q4 of 20 and then through 21. So we're equipping the business for the long term. So one thing that we have been thinking about is, let's not talk about what happens after COVID. Let's talk about how we prepare the business to live with COVID. Yeah. Because I don't something that has a beginning and an end. Yeah, that it's something that's going to be with us for a while. Like every public safety threat is with us. Roads are a public safety threat, and we manage to create life with roads and with the threat that creates for us. Everybody's talking about what will happen when flu season comes back. Is there going to be a second wave? That's kind of all the talk. And I think any of that is possible. And until there's a vaccine and a treatment, which is not going to happen tomorrow, equipping our business to live with the implications of that is how we're thinking about it.
We're not going to have a vaccine tomorrow? You're going to burst my bubble?
Oh, dang it. I knew you were waiting for that.
Now a word from our sponsor, Bator Training and Consulting. Would you like to create an experience both for your employees and your members that increases productivity and sets your credit union on a straight path for growth, even in these times? Then let's talk. Let's set up a 15-minute consultation where we talk about your unique institution and how we can increase productivity and growth, whether your credit union is 1 million in assets, 10 billion in assets, or anywhere in between. And during that complimentary session, let's also talk about our B plus C plus S snapshot, formerly called our B plus C plus S audit. We do a deep dive into your brand, culture, and strategy. It's often the perfect start in working with Bator Training and Consulting, and provides a real value in a full report providing observations and implementable actions for the enhancements of your brand, culture, and strategy. This service also includes a 2-hour video meeting with me, Kbator, to review the report with you and your management team and discuss how we can create a well-branded experience for your employees and members that's going to increase productivity and help the growth of your institution. To learn more, send an email directly to me at Kbator, Bator, at btcinc.net. Again, that's Kbator at btcinc.net.
I hear what you're saying. With many of my clients, whether they're credit unions or in other industries, I say, I'm a lot more comfortable looking out 2 to 3 years on strategy rather than 3 to 6 months, because I really don't know what this is going to look like. I mean, we don't know if we're going to have restaurants at 50% or 20% capacity or what it's going to be. But Robert, let's hear from you a little bit, because you have a different perspective, not only being in the largest city among our 3 distinguished guests, but also your credit union has a very specific niche rather than being community. So maybe you could speak from that point of view.
Yeah, thank you, Ken. Both Stacy and Eric, I agree with a lot of what you said. We're experiencing the same things. Eric, I'm glad you guys are going to be back and operating soon for full hours. We're not near that point. We actually closed most of our branches. We have 2 open, and they're both open limited hours, and we've done everything we can to encourage our members to socially distance. Now, the membership that we serve is the International Longshoremen and Warehousemen's Union. So they're like a brotherhood, and they tend to congregate. They're like a fraternity, and so getting them to sort of socially distance and do the things they're supposed to do to keep our branches safe and our employees safe is tough. But we've managed to do that. We've managed to establish rules. We've sealed the branches. We've kept the 2 teller lines open. So the members are actually doing very well, and they're working. So they continue to come to the credit union. They continue to call, because they have to bring goods in from the port, which is sort of in a unique position. Sort of like you, Eric, our members have been fairly unaffected economically. We have a pandemic member assistance program that's out there. We've had 80 members out of 22,000 that have taken advantage of it and advantage of the loan, applied for fee waivers or skip payments or anything else. So we've managed very well. We've been lucky from that standpoint. We are seeing deposits increase. And so the deposit increase, like you have experienced, we've seen deposits increase because they're not spending money as much. We did find out, though, because being in marketing and business development, I had a whole business development team that I had to repurpose. And so what we started doing was we started making outbound calls to all the new members that have joined over the last year. We started with the members in first quarter of 2020 and have been working our way back to the middle. I think we're in second quarter of 2019 now. And we found that we are getting a lot of loan referrals out of these members. So we call them as a service call to help them follow up with them, help them access their account, do different things, and make sure they've got their debit card, make sure they've got everything they need. And it turns into, if they have a flag on their account for a pre-approval, it turns into a conversation about a car. And in the last 2 weeks, we've generated 30 referrals over to lending for auto loans because we had a promo that was coming to an end. So that's really actually helped our loan volume that was basically dead. As far as trying to generate interchange income, because we know we've got to generate the income to offset the increase in deposits, we've started an essentials promotion for our Cargo Rewards Platinum Visa credit card. So we're doing 3 times points on essential purchases. Now, we know we're not going to get the purchase volume that we normally get for an average transaction volume that we're normally going to get for a holiday purchase or a vacation promo. But the fact that we are getting transactions and getting income, we're willing to pay out the points for that. And we know those points will come due. Probably we have a 3-year expiration, so probably the majority of them will come due a couple of years from now. But hopefully we'll change patterns because we have Grubhub, Uber Eats, and all these other delivery apps where they have to put their card into the app. Hopefully they forget about it and our card becomes the primary card for that app, and we see that pattern continue after this promotion expires. So we don't have a pattern to reopen yet fully. We're just sort of looking at what we're doing now so that we can continue generating some sort of income and continue to serve our members the best we can. As we start transitioning into a reopening, the challenge is going to be how we do that with business development and marketing, how we change that pattern in dealing with members and recruiting members. At least from my point of view, that's going to be a big challenge for me.
Yeah, very, very interesting on a couple of points, Robert. One, as some of you know, I'm blessed to work with a number of credit unions that serve first responders, and they initially had some of the same issues that you alluded to. Is that they have great members, but they're off duty. They come in, they want to congregate, they want to talk. Like, yeah, this is a little bit rough on the social distancing. And one particular credit union got a little tired of their members hitting on their cute tellers during a pandemic and says, all right, we can't have you in here for 5 minutes to 10 minutes to try and get a date. We're closing this down and we're going to drive-through only. The other point that you alluded to, and this is one that I've continued to make throughout the pandemic, is while marketing, may need to change a little bit in that, you probably don't want to be promoting RV and vacation loans, consolidation loans, and also auto loans. I personally don't have a problem with. If you need a car, you need a car, whether we've got a virus or not. So I think that some marketing could still go on, but I do believe that the last thing that any credit union should be doing is pulling back on proactive branding. This is the time to be very visible. You don't necessarily need to be selling, but you need to be on video, audio, email, whatever it is, because I think that this time is not only important for the membership to really hear from their fiduciaries and say, you know what, hey, we got this. Yeah, there's some issues, but we got this. And guess what? ATMs are still going to be spitting out money, so don't worry about that. And I think also it plays to what can be a real opportunity to be leveraged post-pandemic in that, hey, we saw you visibly, whether it's video or otherwise, for weeks and weeks and weeks during the pandemic. You didn't pull back. In fact, I heard more from you then, and you went out of your way to help us. You know what? Even if they even use an extreme, even if I have to declare bankruptcy, I'm going to reaffirm with you guys because you were there for me. So I think that this is an excellent time for the right reasons to continue branding. I'm going to go ladies first to Stacy and see if she thinks that I'm on point or if I just said something stupid like I usually do.
Luckily, this is an exception.
It's an exception. Thank you.
So what we've been talking about is now is not the time to step back. It is the time to step forward. Yeah. And so as we think about how we are thinking about our strategy, how we're thinking about our relationships with members, so similar to what Robert mentioned about kind of calling campaigns. So right now we have our branch footprint is 6 branches. Only 2 of those have drive-throughs. So we have closed the 4 that don't have drive-throughs. We're doing transactions only via drive-through and then appointments only in branch lobby. That's how we're managing service right now. We do have full hours in those branch lobbies, but the service is a little bit constrained. So we have retail employees who, we've kind of recast all of the staffing, and we've actually created teams of our retail employees to minimize the possibility of exposure. So in the event that somebody tests positive, obviously everybody that they worked with has to go self-quarantine. And so you can imagine it wouldn't take very long before you don't have any more retail employees to be able to serve your members. So we put people in teams. So our retail employees who would normally be working every day, they're only working every other day right now, or at least they're only working in branches every other day right now. So we've set them up to work from home, which was its own technology challenge. You can imagine we don't issue laptops. So we had to figure out how to navigate that.
You get an iPad. You get an iPad. You get an iPad. All of a sudden, you're like Oprah. Yeah.
Exactly. So we are figuring out how we can serve members in those capacities. So one thing that we're doing is we are calling members who we can see are getting unemployment checks, because of course we can see that on the incoming ACH, and just asking them if they need help. It is merely a service call so that we can make sure that they are getting what they need. Robert, as you mentioned, it actually has turned into a fair number of referrals, but that is not the point. And in fact, these are in some cases 45-minute phone calls, to where, I mean, the members are just very appreciative that we reached out and said, do you need anything? Can we help you? What can we do for you? And so I think this is the time, while there might be some residual opportunity in that, that is not the purpose. And the point is relationship. It is not revenue. And so how can we use this time to deepen and reinforce relationships? Also, how can we use this time to move faster on things that we've known have been a good idea for a while? So like right now, a couple of those retail employees, when they're working from home, are thinking about what would a virtual assistant look like? So what might it look like if we were able to do this and help members open new accounts, do the things that they can open new accounts online, but they might not choose to do it that way with us. And there's a variety of other things that they would otherwise need to come into the branch for. How could we offer them an option like this? What would that look like with our systems and our SOPs and whatnot? So we've got some people spending some time on that. And then we also have some people spending time on how could we help a couple of our retail employees become experts at virtual account switching. So the background to that is because we do a lot of small business lending, we last year became an SBA approved lender, and so we do SBA loans. And so we had the opportunity to participate in the Paycheck Protection Program as a lender. Our commercial team is working day and night. I mean, it has been outrageous, the amount of work that they have put in.
Call it the Wild Wild West.
I've never seen anything like it. I mean, just applications that don't make sense entirely, and they're trying to figure out, like, what are the rules to make it forgivable? Well, we kind of know. Yeah, I mean, it's the Wild West of commercial lending. But, getting through it, and we have so many new business members that are so grateful that they were able to get a PPP loan through us, because they work with, typically it's a big bank, and the big bank couldn't get them into a queue, couldn't give them, any of the guidance, and they want to move their full relationship to us. So they, because we were able to be there in a time they needed it, they want to move all their operating accounts, they want to move all their personal accounts. And what we have discovered is, for us, those are two really separate worlds. So like, right. Here's the commercial lending, and here's the retail banking world over here, and never the twine shall meet is only a little bit of an exaggeration. And so we are working with a couple of our retail employees to say, we need to be capable of helping to manage a full relationship for a business owner. And so that would include their personal mortgage, as well as their operating accounts, as well as their families, and make that process easy for them. Because the last thing these business owners need right now is to have to go figure out how to walk through all of our processes. They are busy trying to keep their employees employed and trying to figure out how to serve customers in this crazy environment. So if we want to help them follow through on their desire to support the credit union movement, now that they've figured out how important credit unions are, we've got to make that easy for them. Yeah. So those are some of the things.
Excellent points. Eric hasn't said more than 3 words in the last 10 to 15 minutes, and I know the hamster's on the wheel. So, Eric, I'll let you have the floor to either address some of the great things Stacy said, or go back to my pseudo branding question.
Well, Stacy's nailed it. I mean, in a lot of ways, we talk about PPP and its impact, But just the idea of those people in the circumstance, what they were really looking for more than anything else was just somebody to say, where are we? What's going on? And we were not an SBA lender. We got into PPP. So we were one of those that added on and then had to get this up and it's been wild, wild west. But we've done 70 loans, and I will tell you that those 70 are worth 700. Not in terms of just dollars, but what they've done in terms of community branding and word of mouth. And Ken knows our community, and there are other financial institutions in our community like there are for everyone else. And unfortunately, for those institutions, and fortunately for mine, they may have made the choice to not participate in the program, which ended up being not so much a bad on them, but simply a missed opportunity for them. And I think it really boiled down to a work ethic. It boiled down to showing what your institution's work ethic was willing to be to match what the small business owner's work ethic was. And it created a symbiotic relationship real quickly that they appreciated. And in the long run, I know for Stacy, she knows, I know, PPP probably will be the single biggest decision we made to ensure that our balance sheet and our income statement was stabilized during COVID throughout the entire process. Because quite honestly, it took a lot of work, but there's a reward that is coming in exchange for that work. And that reward's going to make sure that my institution remains healthy and has some longevity. I truly fear for the smallest credit unions in California, desperately. They are not going to come through this cleanly, and they may be perfectly fine today, but smaller credit unions are going to struggle because there are going to be so many unintended consequences. And that's why I said, if you know your brand and your brand's on point, you're going to be perfectly fine through this, because honestly, you're going to not hesitate to react. We heard about PPP. It took us 48 hours to make the decision from policy, write it, board, go, done, because we knew it was absolutely in our brand and our wheelhouse. And that decisiveness played out for us. But for so many people, they're looking for that. They're looking for that confidence. They're looking for that institution that's wanting to stand up. And those ones that weren't are going to have that challenge. Yeah. Then, like I said, unintended consequences. This is a 9/11 moment. This is this will go down in the history books like any other. All those who studied the 1918 Spanish flu epidemic, no. Okay, no. But was there a Great Depression that followed exactly 10 years afterwards? And was there 2 world wars in between? And, but for this generation, this is going to be a life-changing type of mentality. And it's going to change how we do business. It's going to change how we communicate. It's going to change how people recognize your brand. And I see the unintended consequences of that reaching small credit unions in much larger waves down the line, just like 9/11 did in BSA, or in Know Your Member, or in there's always unintended consequences in bureaucracy, and I think that bureaucracy might be a death blow for some small ones. And for us, we just said this is opportunity versus something to be afraid of. And if we get burned, we were going to get burned either way. We were either going to be burned sitting on the sidelines waiting for the problem to reach us, or we're going to get burned by gambling on our members and on our community. And every time we found that's, and I don't mean to gamble, I mean taking a risk, building a product, taking the work ethic. And we found every single time that we make that choice, we win. Where if we make the choice of, I don't want to call it the easy road, but I want to call it the lazy road sometimes, which is just, it's really easy to not do that next step.
Yeah.
In a crisis.
Well, to your point, and I see it with at least one of my clients, and I see it with a few credit unions out there. Having been in the industry for I think about 25 years, I look younger than I am. Yeah, I'm surprised Robert didn't throw something at the screen. But what I find is fortunately, there are a lot more credit unions these days that are brand and sales focused rather than operations focused or finance focused. I wrote an article on that for the Credit Union Business Magazine a couple weeks ago titled, It's Still Your Time, but You Have to Have the Guts. Because I think a lot of credit unions have a tendency, and it's not just size. I know a couple of credit unions. One of them's my client that is under 10 million in assets, and they're embracing this branding thing. They're figuring out how to do videos and how to do blogs and do all that stuff to be front and center with their membership. And I know a $500 million credit union that has gone into an operations shell. You don't see anything from them, and I'm like, for the love of God, will you communicate with somebody outside of your organization because you're going to pay for it later? So that's what scares me, is that those credit unions, regardless of asset size, unless it's, some $10 billion credit union that could survive almost anything. But I think that any credit union, especially under $5 billion, that goes into an operation shell during this time is going to have a real rough time post-pandemic. Robert, you're a marketing and branding and business development expert. What do you think about that?
No, I agree. I'm saying something. Almost saying something is better than saying nothing. You've got to make sure that you reach out to your members. And, we had the same experience that Stacy did with our outbound calls, is that they were appreciative that we were just reaching out and we were just contacting them. And, we had an employee in business development who had just started when all this went down. She had 2 weeks of training back home, and we're opening up in Hawaii because we're opening up to the ILWU in Hawaii. So imagine being in Hawaii, being a new employee, and all of a sudden transitioning into outbound calling. And she's done an amazing job and reaching out to our members in Hawaii. And even here, the Hawaiian members, we've heard that she said they like to talk story, because originally when this all sort of went down during the first week or so, people were at home. And so our lifeline, those outbound calls were a lifeline, and they were an interaction for people. And so they would basically tell them exactly what was going on in their life at that time with their family and everything else. And so it was almost like those calls became a different call, not just reaching out to say, hey, you're a new member, want to make sure you know how to access your account, but we're your lifeline. We're someone you can communicate with. And so it really helped. We've done a lot of the same things, and we've communicated with separating staff and changing hours and everything we've had to do with the pandemic. But what we've done is we've reached out to the union officials. So all the union officials in Northern California, Southern California, and Hawaii, they all get letters from the CEO saying, this is what we're going to do before we announce it to the membership. And then the members, we send out emails, and we refresh those emails, like link them to a page that has on our website that has all the information they need to know about our COVID response. And we send out anytime we are about to make a change, we send an update via email to the members. We send an update to the union officials so that they have it ahead of time so they can communicate it to their members. And so that has made a huge difference. Every so often we have somebody who grumbles and, say, well, we didn't know that your branches were closing at 2. Well, you also didn't pay attention to the email or read the signs that were on the building. So, the union knows that we're reaching out to them. They support us. And as long as we have their buy-in, it makes it much easier to get the members buy-in. But you're right. You've got to communicate every bit that you're doing, every step of the way, because it makes a huge difference with the membership and, and how they perceive you and how they perceive how you're handling the crisis and how you're treating them during the crisis. Yeah. And the pandemic will change your business model. We don't know exactly from a business development standpoint how it'll change the business model with these guys, because it was a lot of face-to-face. So, we might be outbound calling for a while. We don't know, but we just sort of have to figure out as things loosen up, that's going to be the challenge. because how fast do we get back to where we were? And if we do get back to where we were, do we have to have, sneeze guards on our tables
Right.
at these events so that people, like they have in the stores? Do we have to have spots at our booths at an event where people are socially distancing as they come up to get their tchotchke or enter to win their prize and interact with our people?
Or even be able to get a tchotchke.
There are a lot of yeah, exactly.
Yeah.
Exactly. You've got it. There are a lot of things you have to think about, and how is that model going to change what we do as credit unions? Because we don't have the massive brick and mortar model where Wells Fargo's on every corner. We also don't have the massive TV and radio budgets. Or in a market like Ridgecrest, Eric, you could probably do it, but in LA, I can't do it. I'm noise if I take anything out. Yeah. So it's going to be an interesting change.
Yeah, I would argue that one of the interesting things about having the rural environment that I have is that I can actually be 3 to 5 times more aggressive than somebody can in an urban area, simply because I can move faster, and my risk of actual spreading out into an area that's going to end up hurting me, I'm taking faster, smaller steps than a large organization. That's one of the reasons why we've been able to take advantage of it.
Yeah.
To a certain degree.
Yeah.
We're organization in this time. That if I were to choose where I would want to be on the asset size spectrum, I would rather in this environment be on the smaller asset size, because you move faster, you make decisions faster, your risks look different, and it's the bureaucracy of the larger organizations that down their ability to react and make.
And those organizations are leaving opportunities. The banks are leaving opportunity on the table. Even the small community banks, I hate to call out other credit unions, but there are even other credit unions that are choosing to make the decision that are leaving holes of opportunity. And you don't have to try and grab every single one, but you can certainly make your presence known in a much larger scope. Ken and I have worked on this for years, and he knows what we've been doing. But I mean, we literally saw in a 30-day period roughly a 16% growth in loans and assets in a 1-month period. And that's just because we chose to attack PPP. One product, just making one single product decision.
Yep. That's surprising. Yeah, I actually, wonder, and as we get close to the top of the hour, we'll kind of wrap this up here. But yeah, I wonder, I've joked with one friend of mine in the credit union industry who runs a credit union that's about 350 million in assets. And we joke that that's the worst. That, I'd rather be 35 million or 3.5 billion, because if I'm 3.5 billion, I could just throw money at the problem and say, okay, we got a compliance issue, hire somebody, let's go. And if you're 35 million, it's like, all right, we can move fast. The regulator isn't necessarily on our backs as much. But at 350 million, we got the focus from the regulator, and we don't necessarily have all the resources at our disposal to just, snap our fingers and make the problem go away. But very quick last question, maybe 2 sentences or less. I'll go around the horn here. What is your 2-sentence suggestion to credit unions for the rest of 2020 and early 2021? What do you think that the credit union industry should be doing? And I'll start with Robert. I'll put you on the spot.
Wow. I would say don't stop asking for the business. Don't stop communicating with your members, because you've got to be able to serve your members to survive. And part of serving your members is asking for the business, and part of it is outreach. So continue to do all those.
Yeah, and thank you for not breaking into song and Don't Stop Believing. I appreciate that. Stacy, what's your tip or thought?
I would say my advice would be take advantage of this moment to accelerate what we should be doing already. So all of the virtual things we're doing, all of the digital things we're doing, all of the remote things we're doing are things we should be doing. We should have done them before. We should keep doing them next. we've got a license in a very short period of time right now from our members, from our directors, from our funders to be able to do that faster and better. So don't miss your moment.
Got it. Eric?
So I guess mine would be just be decisive. Be decisive for your organizations. Be decisive for your members. Remember that you are a service organization built on the financial assets of your members to serve your members. And you should be making your decisions based on what is in the best interest of your members. Don't let yourself or your organization simply be guided by what everyone else is doing or what the fear index tells you should be doing. Your individual membership is individually different, and your individual communities are individually different. And you should serve them in accordance with what their expectations are. And I use that example as I started with all of us but my office, we have 0 deaths on our side of the county. We have had 3 cases reported in 8 weeks on my side of the county. And I don't believe that continuing it is in the best interest of my membership. And therefore, we make the decision based on what our members need. And just be decisive for your members.
Right. Yeah. That sounds like people helping people. And I think we might have heard that once or twice in the last few years, maybe. Maybe we should go back to that a little bit more. Last question, and then we'll wrap this up. Very important question, especially since we have 3 people from home and 1 person in the office. Who is actually wearing pants? Robert, you are. Wow.
I noticed Ken's hand did not fall.
Well, it depends on what kind of pants you want to call it. They're sweatpants, but I am wearing pants. I decided.
I think when you start doing podcasts in pajama pants, you've lost the
credibility. Yeah. Well, if it's good enough for Steve Mariucci during the draft to wear nothing but gym shorts and a suit and tie on top, it's wearing sweatpants is good enough for me for the Credit Union Business News podcast. But thank you to all of you for coming back on. Literally, I could keep this going on for at least another half hour or so. But 1, I know you have things to do in serving your members. 2, you've already talked to me enough. But speaking of talking to me, and this is an announcement for everybody that's listening or watching this podcast, we will be starting the Credit Union Business News group. We're going to have a networking group via this type of forum that will be starting in a couple weeks as a gift to all 3 of you. If you could stand speaking with me again, at least as the moderator, you all have free access till the end of 2020. We're going to charge a minimal charge. We're going to try to work this every other week because I think monthly isn't enough and weekly is just way too much. But I know in the absence of a lot of events and chapter meetings and so forth, all of the best credit unions I've seen have really thrived with collaboration. And we don't have a lot of those in-person meetings now, and the Credit Union Business News podcast is going to step up and create this virtual networking environment. So there'll be more information on that coming up in the near future. But you 3 have access to it as a gift for coming on with me again. And again, thank you very much for spending some time with me this morning. I really appreciate it.
And thanks, Ken. I just want to throw in there, we talk about collaboration. Collaboration is so key. Literally, we would not have succeeded at PPP without the help and support of the California Credit Union League and Redwood Credit Union, who literally came to a low credit union's aid and said, here's things that you need to know. Here's some document samples. Here's some this. Without that collaboration, for our organization, you talk about how organizations help build organizations. Collaboration is absolutely key. And when you said, I don't want to miss the opportunity to say thank you to those people, because a small credit union like ours could not have succeeded in the way we did without those resources around.
Yeah, no, I appreciate you saying that, and I'm really glad to hear that. I think that collaboration is a cornerstone of this particular industry. And I do believe in normal times we don't do it enough. We're not as cooperative as we should be in a cooperative industry. But I will say when the chips are down, and I certainly saw this around 9/11 and the Great Recession and so forth, when the chips are down, we're reminded in credit unions of how important collaboration is. So I appreciate you mentioning that, Eric. Thank all three of you again. I hope you have an awesome day. Thank you for providing a lot of great insight, which I know is going to be valuable for all of our listeners and for all of our listeners or viewers of the Credit Union Business News podcast. Thank you for being with us in our 10th episode, and we will be back with our 11th episode in about 2 weeks. So we'll see you then.
Learn more about Credit Union Business News at creditunionbusiness.com. Suggestions for the Credit Union Business News podcast can be directed to Tim O'Hara at tim@cubusiness.com or Ken Bator at Kbator, Bator, at btcinc.net. To learn more about this episode's sponsor, please go to btcinc.net.